Hello, I'm Ryan Lightfoot-Amanoff, and welcome to today's Ideas for Your ISA webinar from Kepler Trust Intelligence. We're now in the finishing straight of this month's worth of webinars and building towards an exciting crescendo with today's presentation from Seraphim Space, hosted by James Brugger. Now, for those of you who are new to events, firstly, welcome. It's a pleasure to have you. Here is a quick rundown of our format. James will start with a roughly 30-minute presentation going over the investment case for space, as well as how his portfolio looks to capitalise on this. And then afterwards, he will hand back to me for some audience Q&A. So if you'd like to pose any questions, please use the box in the bottom right of the screen, and we will collate these and put them to James at the end. That is quite enough from me. We're all here for the main event, which is James, so please, without any further ado, take it away.
Thank you very much, and hello everyone. Delighted to get the opportunity to speak with you today. So I'm going to hopefully tell you a little bit around why we see that space as being one of the most compelling investment opportunities of this decade and beyond. So to start, why space and why now? Well, sorry, I'm having some issues with the slides changing. Apologies, Evan. There we go. I'm going to start with a bold claim. Space could have as profound an impact on our world as artificial intelligence, and in the process, create a $1 trillion investment opportunity. How much of the 100 trillion global economy is going to be impacted by this? We believe virtually all of it. Moreover, how much of the global economy is heading to space itself? Think energy generation, natural resources, manufacturing, and even life sciences. Now, this may all sound like science fiction, but there are literally thousands of companies around the world, including those in SSIT's portfolio, that are working tirelessly to make this science fact. The scale of the opportunity represented by space is why some of the world's most successful entrepreneurs, such as Musk and Bezos, have been pouring billions of their wealth into their own space initiatives. And don't just take my word for it, just look at SpaceX, currently the world's most valuable venture-backed business following its merger with xAI, and now primed for the biggest IPO in history. So, what's behind all of this? Why space, why now? So first of all, satellites are the hidden linchpin that power our everyday lives. Billions of people and trillions of the global economy already depend on space. Everything from weather forecasting, logistics, food, trade, communications, entertainment, and indeed security. Next, we believe space really is the next industrial revolution. We've already seen exponential declines in the cost of access to space, a 100-fold decline in the last decade, and a further 10 to 100-fold projected over the course of the next decade. We believe this impact is potentially analogous to that of the PC, cloud, and smartphone revolutions before it. Thirdly, the space market is now at inflection point. Nearly 50% of all of the satellites that have ever been launched in the history of the space age have been launched in the last 5 years by just a handful of private companies. We're projecting to see more than a 10-fold increase in the number of satellites in orbit over the course of the next decade. We're seeing big tech moving into the space market. The likes of Apple, Amazon, Microsoft, Google, Nvidia are all leaning into this market. We've also seen on the back of this VC investment, that's venture capital investment, skyrocketing, outpacing the wider venture capital market and reaching record levels. And lastly, we see space as being a very high impact sector. We believe it is set to grow to being worth multiple trillions of dollars over the course of the next decade, with space very much at the nexus of megatrends, including autonomous transport, climate and sustainability, Industry 4.0, and of course, AI itself. So what's driving all of these changes? Put simply, a paradigm shift in the economics of space. I've already alluded to the fact that we've seen almost 2 orders of magnitude reduction in the cost of access to space. There are really 2 key drivers behind this. The first of them is massive reductions in the cost of launching into orbit, which is evidenced by the chart on the left. And really the biggest change here has been the advent of Elon Musk's SpaceX, and in particular, reusable rockets. This has fundamentally changed the cost structure of putting satellites into orbit and is expected to decrease even further with SpaceX's next generation launch vehicle, Starship. Allied to that, we've seen miniaturization of satellites themselves. So whereas 2 decades ago, satellites might be the size of a minibus, they might weigh several tons and cost upwards of $1 billion, the sort of satellites that are in the portfolio companies that SSIT are backing can be as small as a shoebox, cost less than $100,000, and are principally made up of the same commercial off-the-shelf componentry that goes into your smartphones, your laptops, and your electric cars. So those two things combined are really what has driven these massive reductions in the cost of accessing to space. So what do all of these changes in cost paradigms mean? Well, it means for the first time, it is now possible to launch mass constellations of hundreds and indeed thousands of satellites, as illustrated on this slide. We consider this to be a new form of digital infrastructure in the side. We've got satellites that are, because we have these large constellations, capable of capturing data in a whole range of different modalities about every single square meter of the Earth in near real time. We're talking Google-esque levels of data sets here. Allied to that, and another prime example again being SpaceX and Starlink, we have constellations of thousands of satellites that are delivering universal, abundant connectivity, blanketing the entire globe with high-speed internet. Think about the billions of people around the world that still don't have reliable access to high-speed internet, and think about just how profound an impact it's going to be with all of those people being able to get online as a result of these changes. So you can see here on the right that we're really at the knee of the curve of the number of satellites in orbit, with upwards of 100,000 satellites planned for over the course of the next decade, from now some 500 odd companies that have announced plans to put their constellations up. So this market has evolved very quickly and is continuing to do so. What does all of this mean? Well, the combination of all of this data and connectivity from space that I've been alluding to, we believe is going to unleash a wave of disruption that is going to impact virtually every single terrestrial sector. So for those of you that may be invested in these categories, the question you should be asking yourself is how space is going to disrupt these sectors, in the same way that people are asking questions about how artificial intelligence is going to disrupt existing business models. We see space having an analogous impact. What does that mean in terms of how this market is evolving? So the way that Seraphim defines this is through 3 different segments. Space 2.0, this is where we are now. This is really these changes of what's referred to as new space, typified by these large constellations of satellites that are creating this new digital infrastructure in the sky, creating real-time insights on every square meter of the planet, fusing that data with AI to get unique insights, and reshaping entire sectors, unlocking applications, and catalyzing megatrends. Now, what we're starting to see next, in addition to Space 2.0, is the next evolution of the space market, referred to as Space 3.0. So this is very much space-based infrastructure for space. What do I mean by that? Replicating in space all sorts of different terrestrial networks. So lots of space-based networks in orbit around things like edge compute, internet, communications, and data relay. And as well as that, we're seeing as part of this the need for now more sustainable space. Space is getting more congested, manageably so, but understanding what is in space, space situational awareness, particularly as space becomes more contested and more involved in geopolitical tensions around the world, presents some acute challenges, but also some significant opportunities. And furthermore, within this Space 3.0 category, there's also the opportunity for using the microgravity environment of space, the lack of gravity, to be able to achieve incredible scientific breakthroughs in areas like new materials and indeed pharmaceuticals, to actually do R&D and indeed manufacturing of these things in space to bring back down for terrestrial applications in markets that today are measured in trillions of dollars. And then lastly, Space 4.0, the future. So this is an area that from a Seraphim and SSIT perspective, we still think is still somewhat embryonic, albeit an extremely interesting domain. So this is really about exploiting the infinite space resources to sustain our planet here. What do we mean by that? Things like space-based solar energy. The sun delivers more energy in an hour than the world consumes in a year. Looking to use the lunar and asteroid natural resources to replace terrestrial rare earth materials, for example. And yes, in due course, it may also even mean real estate, commercial space stations coming online for both commerce and tourism, lunar habitations and beyond. And for those of you who may have seen the announcements from Jared Isaacman, the NASA administrator this week, the moon is now very much coming into sharp focus of the US objectives in the years ahead. So moving on now that I've hopefully given you a bit of a sense of the opportunity that space represents, let me tell you a little bit more about Seraphim and SSIT. So first off, Seraphim Space Manager, the manager of SSIT. So Seraphim is the most prolific investor in space globally, with a portfolio of nearly 150 space tech companies across our public and private portfolio. Seraphim was the first VC in 2016 to focus on space, and SSIT represents the one and only investment fund listed on public markets focused on space around the world. Our partners and backers include some of the biggest space corporates globally, who we continue to partner with very closely for horizon scanning and supporting our due diligence. We continue to receive a massive global deal flow, seeing virtually all deals at all stages. This generates the information asymmetry that we use to then build conviction to cherry pick the best of breed businesses to back. We triage deal flow between our different activities that include, for early stage, our affiliated accelerator and early stage venture fund. And then for later stage deals, those are triaged in favor of SSIT. We're a value add, hands-on investor, joining the boards of most of the portfolio companies that we invest in. And again, that helps us build conviction. So the key takeaway here is we have a unique model that supports businesses from the moment they are conceived through until they go public. So all stages and in all geographies across our group activities. And really, information asymmetry and conviction are the bedrock of our past and future success. Turning now to look at SSIT itself, a few slides here that are excerpts from our most recent set of results as at the 31st of December 2025. So we've seen over the course of the last year sustained NAV growth quarter on quarter, including in the last quarter a 27.6% increase in NAV to £332 million, with NAV per share standing at 142.3 pence as at 31st of December. As the charts here show, SSIT has materially outperformed all relevant indices and our AIC peer group in terms of its share price over the course of the last 12 months. Indeed, SSIT has been one of the very top performing trusts over the last year, and has for most of the duration of 2026 been trading either at or above its NAV per share. So as we emphasize in each quarter's results, we do believe that SSIT benefits from a number of clear and increasingly well-defined drivers that differentiate us from the more generalist technology exposure of our AIC peers. We believe these fundamentals mean that SSIT's portfolio is very well positioned to deliver further gains in the quarters and years ahead. So this next slide provides a snapshot of the portfolio as at the 31st of December, and all figures here are based on the fair value of the relevant holdings. So drawing out some of the insights from the donut charts on the left into the ecosystem charts at the top right. More than half of the portfolio is invested in what we refer to as platform. This means constellations, these companies that are putting up these large constellations of very small, low-cost satellites. These are the businesses that are developing these digital platforms in the sky that I've alluded to, that have these capabilities of generating tremendous amounts of data and connectivity. Needless to say, defense is the biggest customer typically for those businesses. In relation to geography, you can see that Europe currently accounts for over half of the value of the portfolio, with the balance broadly evenly split between the US and the UK. And as I will come on to talk about, we have seen a profound shift in the European market, driven by geopolitics over the last year, that has been a significant boost to many of our European companies. So then turning attention to the NAV chart on the right, you can see here that the top 10 companies dominate NAV, accounting for 92%, with cash at 6.5% of NAV. ISI, the largest holding in the portfolio at 39% of NAV, was one of the companies that we doubled down on when we invested in it in 2021, deploying a total of $50 million. Such was the height of the conviction that we had. That conviction is paying off as this business is performing exceptionally well on all measures, and I'll go into some more detail on ISI in due course. Worth calling out that in our last set of results, our top 4 holdings all witnessed significant NAV increases over the period, and those 4 holdings together now account for 77% of NAV. So this is a fairly concentrated portfolio, but it is concentrated by design. Generically speaking, in a well-performing venture or growth stage portfolio, it is typically only a subset of the companies that you invest in that drive overall performance of the fund, and we believe that the complexion of our portfolio matches up against that. A couple of other stats just worth calling out about the portfolio. So 70% of the portfolio by value is funded today through to a cash flow break even. That means, in theory, they don't need to raise any more money based on latest projections from the company's management team. Furthermore, 80 companies representing more than 85% of portfolio value are now projecting that they will become EBITDA profitable during 2026. So these are important indicators of the fact that this portfolio is now maturing, with most of the value in the portfolio held in well-developed businesses. So I thought it'd be worthwhile just spending a little bit of time bringing some of our key investments to life, starting with our most important company, ISI. So ISI operates the world's largest constellation of radar satellites. Unlike other satellites, radar satellites can image the Earth day and night in all weather conditions, as illustrated by the illustrations on the left-hand side of this page. This capability of being able to see day and night and in all weather is essential for numerous dual-use applications. ISI is able to provide actionable information on every square meter of the Earth, potentially every few hours, for sectors that include defense, climate, and insurance. By combining ISI's radar imagery with artificial intelligence, it enables the company to monitor change detection around the world in close to real time. I've included here on the right-hand side an example of some of the radar imagery that ISI creates, and the application of AI-enabled analytics on top of that to be able to identify particular pieces of equipment or particular changes. So ISI also sells complete sovereign satellite systems to governments around the world. So this is really aligned with the growing need of individual countries and groupings of countries to want to have security autonomy and not be overly reliant on third parties for their individual and collective security. So ISI estimates that market for delivering of sovereign satellites is worth by itself up to about $10 billion a year. So 2025 was a transformational year for this company. It announced a slew of 9-figure deals with European nation states for delivery of these sovereign satellite capabilities. It announced a joint venture with Rheinmetall in Europe and a partnership with IHI in Japan. Critical thing to note here is that these recent wins are only now starting to hit the P&L. They've been in backlog until recent times, providing the business with visibility for sustained growth as it prepares for a potential IPO in the course of the next couple of years. Just to go into this particular example a bit further, one of the major milestones that ICEYE has achieved recently is the announcement of its 1.7 billion euro contract win via its joint venture with Rheinmetall for the delivery of a dedicated constellation for the German government. So we think this is a fantastic case study for just how profoundly the geopolitical environment and the role of the commercial space sector has changed in Europe over the last year. So taking a step back, a year ago, after we had published our previous set of interims, President Trump had just taken office. The world was in a state of flux over threatened trade wars with Europe under severe geopolitical pressure. The new Trump administration made clear the need for a major reset of transatlantic relations, referencing Europe's need to learn to stand on its own 2 feet regarding defense. The Trump administration likewise indicated an unwillingness to continue with previous levels of support for Ukraine, going as far as temporarily stopping any intelligence sharing. So the problem here is massive historic underinvestment by Europe in sovereign defense satellites. Just look at the chart on the left-hand side of this page. Europe has barely launched any government defense satellites over the course of the last 5 years, in stark contrast to Europe, to China, Russia, the US, and indeed Iran, who has launched many more than Europe combined. So this over-reliance on the US had to come to an abrupt end given the change of administration. And this deficit of capability was most acute around what's referred to as intelligence, surveillance, and reconnaissance. So these are the satellites like ICEYE that are used to collect intelligence in near real time around the world. So what was the response? Well, the political response was to rally, not retreat. The European leaders closed ranks. European-wide major increases in defense budgets were announced, led by Germany, who changed their fiscal policy to access 500 billion of debt to finance defense. Space was identified as a key area of European strategic autonomy, and Europe's response marked a structural change, not a temporary fix. This response by European governments was mirrored by industry, best exemplified by ICEYE and Rheinmetall, forming a joint venture for large-scale satellite production in Germany. What's the outcome of this been? It hasn't just been rhetoric. Within 6 months, we've seen this contract award of 1.7 billion euros from the German Bundeswehr to ICEYE and the Rheinmetall joint venture to deploy this large radar constellation to protect NATO's eastern flank. ICEYE's vertical integration and production velocity were key to this contract award. ICEYE has now become the de facto standard for European ISR, ISR being intelligence, surveillance, reconnaissance. Countries are sharing data through their sovereign-owned satellites and also accessing ICEYE's own satellites, which can draw upon the larger commercial constellation as and when required. ICEYE's management team has recently gone on record stating that the business generated over 250 million euros of revenue and over 100 million euros of EBITDA in 2025, and that the business is on track to generate over 1 billion euros in revenues next year. So this business is performing extremely well. Next on to Hawkeye 360, another one of these small sat constellations that we've invested in. So what does Hawkeye 360 do? Well, it operates clusters and in each cluster there's 3 listening satellites that detect and geolocate the sources of radio frequency signals emitted on Earth. So it's capable of detecting a broad array of these RF radio frequency signals from everything from ship radios, cellular devices, GPS devices, radars, emergency beacons, etc. These sort of signals are used to track ships, aircraft, vehicles, and indeed to detect hidden and potentially illegal activity. So through its constellation of satellites today, Hawkeye has been able to geolocate hundreds of millions of these RF signals to generate what's referred to as signals intelligence. And I've got a couple of examples on this slide to draw this to light. So when you take these hundreds of millions of RF signals that it's captured, and you fuse it with Hawkeye's proprietary AI-driven analytics, it transforms these signals into actionable insights. So the map you can see on the top right, that's a map tracking all of the world's ship movements using AIS beacons that every commercial vessel is meant to have. This capability has numerous dual-use applications, which range from defense and intelligence to environmental monitoring for example, monitoring illegal fishing. Fair to say that defense is really the lead application for this business, and the map you can see down on the right is a good example of this, where Hawkeye's unique insights are being used to locate the sources of electronic interference and electronic warfare that Russia is using in its ongoing conflict with Ukraine. So this business is an American-based business and is the #1 commercial provider to the US government of this kind of signals, this commercial signals intelligence. And that's a market in just the US government alone that's estimated at being worth in excess of $6 billion a year. So a final case study before we look to wrap up. A company called Zona that is developing the new standard of satellite navigation. So the positioning, navigation, and timing, more acronyms, I'm afraid, PNT, but more often known as GPS, that I'm sure everyone is familiar with from their satellite navigation and things like Google Maps and Uber. This capability is government owned today and is really the invisible utility driving the world, powering trillions of the global economy. So existing government operated GPS satellites lack the accuracy and security to support autonomous systems and robotics. So this is where Zona comes in. It's launching its own constellation of GPS signal boosting small sats, as illustrated by the left-hand side of this chart, to deliver ultra-precise navigation for the future of autonomy. What does this mean in practice? Whereas with a normal GPS system, believe it or not, it's on average only accurate to within 5 or 10 meters, whereas Zona's system is accurate down to 2 centimeters. So you can see on the right an example of an illustration of autonomous cars. You can think about what the difference it would make with a car thinking that it's within 5 to 10 meters of where it really is versus 2 centimeters. So we really think this is what Zona is developing is potentially a massive unlock for a myriad of different dual-use applications in defense, autonomous vehicles, IoT. It's also aligned to play a key role in filling a critical gap in US national security, namely GPS resilience. Governments today that operate all of the satellites that deliver GPS, there's not very many of those satellites, and it would be a risk for potential adversaries to look to interfere with those satellites. Whereas if you have a company like Zona, which is putting up hundreds of these miniaturized satellites in its network, it's much, much harder to knock it out. So this company is addressing existing multi-billion dollar high performance GPS related markets, and also has a capability that in theory can be accretive to the 7 billion plus GPS enabled devices that are installed worldwide. It's worth noting that just a few hours ago, Zona announced a new $170 million oversubscribed Series C round, which has resulted in the value of SSIT's holding in this company having increased from the approximate 10 million sterling as at 31st of December 2025 to now being valued at around 28 million sterling. So another strong endorsement of the fact that this business is on a very strong trajectory. So this is my last slide before we open up for Q&A. So just a few closing observations. So firstly, global investment in space tech has remained very strong over the past 12 months, rising nearly 50% and setting new records. The US and China continue to lead within the space investment market, but Europe has clearly stepped up a gear. Geopolitics has fundamentally reshaped European defense with a generational realignment now underway. The rubber is really hitting the road. Procurement is increasing, favoring best-of-breed technology startups, such as those in SSIT's portfolio, over legacy incumbents. A new breed of what's being referred to as neoprimes are being created. We really do believe that within the space domain, we will see our own equivalents to the likes of Anduril and Palantir as two classic examples of neoprimes. What do we think the outlook for the year ahead is for the sector? Well, first and foremost, we think the powerful tailwinds that have been driving the sector for the last few years are likely to continue strengthening. Geopolitical tensions and the ongoing conflicts in Ukraine and the Middle East are driving defense budgets to record levels. This is a structural change, not a temporary fix. Critically, nations procuring sovereign capabilities have historically been unable to own space assets themselves. This is no longer the case. Space capabilities are now affordable and within reach for many nations. The US Golden Dome program underscores the strategic role of space, and we expect similar architectures to be pursued by other nations. And lastly, the world's largest IPO, SpaceX, would be transformational for the sector, bringing in increased visibility, liquidity, and momentum. We expect that a potential IPO by SpaceX would bolster public market appetite for high-quality space companies such as those in SSIT's portfolio, and improve funding conditions for ambitious private companies too. We also would expect it would just generally act as a catalyst across the broader space tech ecosystem. Indeed, Elon Musk's focus on space-based data centers to power AI leadership for XAI highlights the strategic convergence of space, compute, and AI, and we expect other players to explore their own space infrastructure strategies. And last but not least, the defense sector remains buoyant and highly acquisitive, and we anticipate continued M&A activity, potentially including within the portfolio. We expect further commercial traction and contract momentum across key holdings, supporting continued operational growth and value progression. That ends my presentation, so I will now open for Q&A.
Thank you very much, James. That was a very interesting presentation. We have had a few questions come in, but for those still on the call, of which there are many, please do carry on putting them in there. We'll put them to James. We'll start with the largest holding in your portfolio, ICEYE. It is quite a large portion of the portfolio. Is there potential for that to IPO in the coming months? And if not, how big would you let that position grow before looking to sort of recycle some of the capital elsewhere?
Yeah, so I'm not going to comment on potential timing of an ICEYE IPO, other than to say the CEO has gone on record in the last 12 months saying that he ultimately expects this to become a public company. And if you go and look at analogous companies such as Planet Labs in the US, it points to ICEYE already being at a scale and profitability profile, and that it could translate into a very successful IPO. In terms of what's our strategy with ICEYE, we're unapologetic for the fact that we have significant capital concentration. We have a firm view that ICEYE is going to continue to execute supremely, and therefore we would struggle to build a justification for looking to divest of some or all of our holding in ICEYE, notwithstanding the concentration risk. We ultimately believe that the current value that we're holding ICEYE on our books at is likely to increase very significantly in the years ahead, and we want to continue to have our shareholders benefit from that growth. So we're long-term holds. It was one of the reasons we ultimately took the decision to IPO via an investment trust, was the attraction of evergreen capital and being able to align ourselves with the sector's most ambitious entrepreneurs over the long term.
Thank you. It's very interesting. Now, a name that's come up a couple of times in the presentation is SpaceX, but it's not held in the portfolio. Can you just talk through sort of the rationale behind that?
Yeah, it's not because we don't believe that it's a fantastic business. It simply hasn't fitted the mandate that we were given by our investors at IPO. What do I mean by that? Well, I've talked about the fact that we're a hands-on investor, that we're very typically a lead investor, and that we're buying reasonable positions in the company that we invest in, from sort of modest single-digit to significant double-digit stakes. At the point that SSIT IPO'd, SpaceX was already worth, I think, upwards of about 300 billion at that point. So it simply didn't fit the policy as it was, and therefore we've not invested in it.
Okay, that makes sense. Thank you. We'll carry on talking about some of the portfolio names, actually. Well, so the portfolio construction. What portion of the portfolio is tilted towards those different space areas, Space 2.0, 3.0, and 4.0?
I think the easiest way to guide to that is to say that the vast majority of it is Space 2.0. A modest amount is orientated towards Space 3.0, and almost none is orientated towards Space 4.0.
Okay, and are there any plans for that to develop as sort of the trust continues to grow?
Yes, as I alluded, we do see the market is evolving fast. We continue to believe that there are significant opportunities in space 2.0, both in terms of upstream, people putting these constellations into space, but also downstream, what people are doing terrestrially, taking all of these data sets, fusing them together, using AI to create novel insights that have significant applications. So we'd expect to continue to be very active in the Space 2.0 category, but on a forward-looking basis, I think it'd be fair to say there would be a more balanced mix between Space 2.0 and 3.0.
Okay, interesting. Thank you. And then, so again, sort of on the portfolio itself, like how much of the revenue is driven by the defense industry, and then also how much of that revenue is driven by government contracts rather than more commercial angles?
Yes, I don't have specific figures to share on this, but I think the guidance that I can give the audience today is that defense is by far and away the biggest driver of revenues and traction. I would say that has been a common feature of the commercial space sector for its entire existence. It is overweight in terms of governments being the biggest customers. Equally, what I would say is our general thesis on the market is that although we will continue to expect governments to be, and particularly departments of defense, to be the biggest and earliest customers in these businesses, over an extended time horizon, we sincerely believe that actually the commercial applications are going to dwarf the revenue potential of the government sector. Every business we've invested in is intrinsically dual use. And every one of those businesses does have a strategy for driving revenues in the commercial domain as well as the government.
Okay, thank you. And that sort of quite neatly leads us on to one of the sort of broader macro questions that we've had in, and that is about the potential for space to be sort of a frontier of war, really, of defense. Like if that is where lots of governments are putting their money and putting their defense spending, is there a potential for that to be an area where we do see some sort of like battle, for want of a better word?
Yeah, I sincerely hope not, but there are quite a few people that have commented on the first shot in the next war being fired in space. I think that possibly gives the wrong impression of kinetic warfare in space. I think it's more likely around interference and disrupting. So that could be cyber, it could be electronic warfare. Thankfully, we're not yet seeing a kinetic warfare, but I think it is true that space is an increasingly contested domain. Why is that? Because whereas previously, if you look back to say the Second World War and the Cold War era, air supremacy was really what mattered because it gave you control of everything below. There's now a layer above that, which is space, because space is enabling all of the terrestrial applications. So you have to have freedom of movement and autonomy in space, and therefore your ability to deny your adversary. That means that people are looking at that. I think a really important thing to point out is, Seraphim doesn't invest in weapon systems and offensive capability. We invest in dual use technology that has a role to play in delivering resilience through commercial capabilities that can offer governments reassurance that if their assets are interfered with, they've got a fallback from the commercial sector. We're not involved in anything on the offensive side of weaponry.
Okay, thank you. A slightly tangential question to that, like lots of the sort of rocket launch you said have increased massively. Obviously, that's going to need fuel to go in that, and a very pertinent issue for people at the moment is fuel. And I'm not trying to compare gasoline at the pump to rocket fuel, very different things depending on what car you drive. But are there any sort of concerns needed for fuel supplies for rocket launchers? And especially around the sort of geopolitical issues we've got at the moment, and could this see sort of a slowdown or a lag in new satellites going to space?
Oh, great question. Not one I've really turned my attention to. I think my short answer is no. I wouldn't see that as being a significant risk. The fuel stocks that you're typically using for rockets on gasoline. for example, doesn't mean that they aren't necessarily fossil fuel derived, but in the context of sort of global supply, the proportion of that supply that needs to find its way to what is still a relatively limited number of rocket launches, I don't believe that space is unduly or excessively exposed on that front, but it's a great question. I will ask some of my portfolio companies.
Yeah, no problem. Thank you. And then again, sorry, they're all we sort of clustered these together to make sure they are very similar. Like, where are sort of rocket launches taking place? I think from my own experience, it was around Kazakhstan area, but where are we seeing these, and are there any sort of concerns for the state of the world at the moment?
Yeah, well, SpaceX is only launching from America, from a range of different locations on either coast, and they account for by far the biggest proportion of certainly the commercial launch market. Clearly, Russia and China and India have their own sovereign launch capabilities. Europe does, but it sort of really badly lags behind in terms of both cost and cadence, and that is something that we would expect to change in years ahead. But if for whatever reason it suddenly becomes impossible for non-American companies to launch from SpaceX in America, that will clearly be a bad thing, but I would say it's probably a reflection of us all having much bigger things to worry about if that were to manifest itself.
Okay, thank you. I've got one question on sort of the investment case, and then we'll go back to some of the trust-specific ones. On the investment case itself, can you just sort of run through some of the benefits of doing some construction in space, things like space data centers? Why is that better to be done in space than it is down on Earth? Do you think the cost of getting it there would outweigh any benefits of it being done there?
Yeah, so well, space as in like physical space. Without getting too cliche, there is an infinite amount of space in space, so you're not having to pay for the land and the real estate. You've obviously got the vacuum of space, so you're having to worry less about needing all of the cooling, and you've got the power of the sun as a sort of permanent source of power. So those things combined, and I would say to a lesser extent security as well. It's a bit harder to zoom out to a data center in space, albeit I think it's fair to say that data centers as people conceive of them happening in space probably not going to be for a while. What you are seeing increasingly now is edge compute in space. So these are sort of individual compute nodes rather than an enormous data center, and there are a myriad of use cases around space specifically for doing edge compute in orbit that people are exploiting today.
Okay, thank you. I'm going to ask a question on the portfolio now. Like, you are one of the very few trusts that is trading on a premium, having had a really strong share price and NAV rally over the last couple of years. Do you think that gives you the opportunity for undertaking any share issuance? And if so, what would you do with that in terms of sort of reflecting your very concentrated portfolio?
Yeah, well, look, I think there's a lot of factors that go into whether any investment trust is able to do a fundraise, and clearly share price performance relative to NAV is a key consideration, but it's certainly not the only one. So both we as the manager and the SSIT board continue to monitor market conditions. As and when market conditions allow, then that is something that we would naturally be interested in looking at. What would we do with any money that we raised? I think really it'd be for a combination of things. Replicating the strategy of doubling down with conviction on things we're already in, which we haven't really been able to do for the last couple of years because of limited amounts of capital. We've had enough capital to continue to support those companies that needed our support the most. The portfolio has been extremely successful at raising money from elsewhere, but we would want to be able to protect and indeed build our position in some of our better performing companies. But as I've talked about, we are very confident that we're going to see lots of extremely valuable businesses being built in space in the years ahead. And were we to access fresh capital, we would naturally want to continue broadening out the portfolio. We expect to see significant NAV growth from companies outside of ISI. I've talked about the tripling in value of Zona today. So we would expect naturally over time, some of that concentration risk around ISI should resolve itself through growth elsewhere and potentially further down the track, raising additional capital.
Brilliant. Well, on that sort of positive outlook, we are going to wrap things up there. James, thank you very much for your time this afternoon. It's been really good to get both sort of some rundown of the investment case and also a bit of a science lesson as well. Makes a bit of difference to a Thursday afternoon. Thank you very much to our audience as well. We've had really great participation, so we really appreciate it. If you'd like to watch the webinar back, there will be a recording available on the website later on today, if not early tomorrow. Just leaves me to say thank you very much and goodbye.
Thank you. Bye.